Well, good afternoon, folks. It is Shooter Scott Henderson. It is July 21st, and we're going to go over swing trade notes for the earnings week starting 7/22. Of course, at the end of our presentation, please do review our disclosures. All right, let's jump right into this. Okay, the last 3 weeks have been hell for me, one way or the other. Either I'm sick, ill, or I fell. We won't go into that, but we're recovering. Hopefully, they say it comes in threes. Hopefully it's over with. Let's just pray that's the case. So we ended up booking a little bit of profit because we did take a piece on Starbucks. So that worked out halfway well for the week. We're still holding crowd and TLT. So earnings this week. Couple names I like. Actually, a number of names I think will do well. Tuesday, we got UPS, Spot, Tesla. Now, what I really like in those names is cash secured puts. Google, ENPH, and TXN. It's just a common shares trade for me. And the reason is I didn't see a plethora of calls really to suggest that. However, Google and UPS, because of the counts, were two of my picks to go into swing trade notes as far as setup. Now, Wednesday, we have Ford, CC, VKTK, and then CMG and IBM. Like Ford, CC, and VKTK, I like cash secured puts. CMG and IBM, I like common shares. However, I might change my mind on CMG and IBM. I want to see how Texas Instruments does Tuesday, so I might change my mind on that. And then Coca-Cola on Tuesday will sort of be my lead for CMG. They've done really well with their burritos. There was some comments about heavy sales in burritos because they got a low dollar burrito, like an $8 burrito, which I order myself over here. They have a chicken burrito that's pretty good. And I probably go there 2, 3, 4 times a month, something like that. Thursday, we have American Airlines. Now, I'm hesitant because I understand there's still shutdowns they're going through. So I don't know what kind of comments they're going to make on the earnings call. So I'm hesitant to put American Airlines up. But prior to that information of the shutdowns, I like the idea of that. Also, I didn't put it in here, but waste management, is a possible play as well. AT&T, I really want to see how earnings come into Tuesday, how Spot does as well. Give me a feeling to the upside. Now, here with Google, my optimum entry is at 176.77 because this is a leading diagonal the way it looked, right? However, history tells us that Google likes to run for Monday, the week of earnings. So it might not give it to it. So I see 3 trade options. One, you can buy common shares here and plan to scale, just add blocks or do good to cancel orders a little bit lower. You maybe put a 0.25% position size on now, and then put the rest of them in play. Right now, my swing target is only 185, but I've got a primary wave 5 up over 200. Should be about 202, 205. Then the next option is buy the monthly 185 calls, which would be August. Don't buy the September. Excuse me, not July. Buy the August, all right? And then plan on adding maybe a little piece. So maybe 70 or 80% of what your assumed position size. Fill, I would wait for the opening range, really see how it's going to run. RSI looks good as far as the bottom. Last week's sell-off was timely for Google earnings. If we have another banner earnings season for tech, which I see no reason why we shouldn't. The only reason I think Google could do bad is if it guides down on AI for some reason, of what's building there. So, but I don't see that being the case. And the other option is to sell September 175 cash secured puts. So you have a couple options on Google. Really what your preference is there. Now, UPS, I'm suggesting half size because this is a Tuesday morning earnings. So we got one day. We got tomorrow. So wait 5 minutes, opening range, pick your poison. You could do common shares as well. I like the August 150 calls. Now, the reason I'm doing August is I'm giving us some room. I tend to be very conservative in fundamental trend just because of our base. You're position traders, most of you. You're not traders. All right. So we want to try and limit the risk. The idea is steady Eddie gains, 30, 50, 75%. Once in a while, we get a couple 100%. Steady Eddie, week in and out, show gains, couple points. That's it. That's what our objective is. That's what the goal is. So that's what we're doing. So, our swing target is 149 on UPS. But realize this is a leading diagonal as well. So this is our minor wave 1, and our minor wave 2 is way the heck down here. So this was questionable with the timeline, but I think it beats. FTX just killed it. FedEx just killed it. And usually when FedEx does well, UPS does too. So I see no reason why why that should change. So that's my thought. All right, so looking at Warner Bros. I picked this up through my scans and unusual option volume. Now we have 55,000 open October to 1250 calls. And I'm like, that looks pretty. But 50% back of this leg is 982. And what do I like to do? I like to be consistent. I like to stick with a program that works and just keep working it. Find another stock, find another setup, put a piece on, let it work, right? So I like September $10 calls. Now, gap fill, we probably received some rejection. So maybe about 960. So if we start seeing rejection in price there, we'll know it. You'll start seeing this, right? Then at that point, but I just don't see that. With the volume here, with how aggressive this is, I would expect if we put in a flag, it'll be here, then we go. Again, the reason I'm doing September, I want to give it some time because this one I plan on holding regardless because I think it has that upside. As a matter of fact, I think it has the upside to 1250 up here where the calls are. Something's going on that we don't know about. Somebody already knows, always knows. And usually we're last to know. So that's my thought on Warner Brothers Discovery. Now, Charles Schwab, I think this is just totally overdone. What they did is they cut the buybacks. And granted, that is probably significant as far as maintaining share balance. But really, $12? I mean, come on. I mean, I can't see this trading environment eroding 15 or 20% of their base. I think it's overdone. So I think it's prime candidate 50% back. However, what I don't know is whether or not this bounces here, which it could, all right, or it doesn't bounce until we get down to 59. Because this is showing me it is another leading diagonal. Our one is down here, which hasn't been completed yet. Our two bounces to just about 61.85. So that means an aggressive bounce, then it fails again. But it gives us two shots at our exit at the $68. So I like the September 62.50 calls. I'm staying really tight. I mean, almost at the money, about 60%. The way that I'm going to split it up is 60% of my position size in September and 40% in the October 67.50, right? Now the 70 calls were a little better price. I like them a little better, but it didn't make sense for where my target was. I want to try and stay right at the money of my strike. That's where I've found to give me the best results on these trades. So that is where my thought is on Charles Schwab. All right, looking at General Dynamics. Now we had this last week and I didn't take it with all the confusion in my life, and it worked. Actually, it worked well. Monday, and I made the comments, and actually I've done this a few times now where I've had a thought, had the setup, and for whatever reason, I made the comment and said, forget about the ammunition trade. That was my comment. Well, that turned out to be totally wrong. So at this point, what we're looking for is an earnings play. I believe it's Thursday, right? And I think it's going to pop. I think it breaks out. I do. Because I don't know what this was, that we had this drawdown in General Dynamics, but the only thing I don't like is that this is a confirmed low on the day. That's the only thing I don't like. But this aggressive a push is not typically followed through with further downside. It's usually done, all right? So we're looking for 300. So I like the August 290 calls. The rest of them, the spreads absolutely stunk. So this is sort of my lagger. I like it just because it was responsive to my thought. We have more activity in the Middle East. We have warships in the Middle East. We have warships in the Straits from China. I mean, there's just a lot of reasons to like defense right now on the positive side. On top of that, I have a primary wave 3, which is way the heck up here at 312. And if there happens to be some kind of catalyst that's going to push this, like stellar earnings, I'd actually like to have a little piece on in this into earnings. But that's what I have for this week, folks. Great trading. Until next time.